Worldwide, more voters than ever will head to the polls during 2024. This super election year will see at least 70 countries, as well as the European Union, together representing half the world's population, hold elections that will prove consequential for the next few years. Some of the most significant elections have already taken place, such as for the European Union, India, United Kingdom, France and South Africa. Still coming is the US election, where we were saved from another Biden versus Trump showdown, where President Biden finally decided to bow out of the race. President Biden has had to deal with numerous questions around his age and mental dexterity, while former President Trump narrowly avoided an assassination attempt. Back in South Africa, the ruling party has lost its parliamentary majority it has held for 30 years, introducing an uncertain era of coalition politics at national government level. There are still many questions regarding the economic policy, which this rather unwieldy government of national unity will follow. Adding more fuel to the uncertainty, the continuing war in Ukraine, the fight in Gaza, which threatens to spread, as well as uncertainty around interest rate cuts, it is not surprising that markets are a bit volatile. As the saying goes, markets hate uncertainty. This is one thing many retirement fund members, especially those close to retirement, also seem to agree with. Members nearing retirement have spent close to 4 decades saving. The last thing that many of them want is a market downturn to derail their retirement plans. Fortunately, our Sanlam umbrella funds offer 3 protection strategies as part of the range of trustee-approved defaults to help protect members against market volatility. These are the Sanlam Secure Strategy, the Sanlam Stable Strategy, and the Volatility Protection Strategy. Each of these strategies utilizes one of our smooth bonus portfolios underlying, or, in the case of the Volatility Protection Strategy, partners a smooth bonus portfolio with an aggressive passive portfolio. Additionally, each one of our umbrella fund's life stage strategies de-risks into the capital protection portfolio, which also utilizes a smooth bonus portfolio underlying, providing smoothing and guarantees to members close to retirement. These strategies provide various level guarantees and smoothing of investment returns to our clients, with the Sanlam Secure Strategy offering the strongest level of guarantees to members. We like to think of these strategies as our four-wheel drive solutions. The benefit of four-wheel drive vehicles is to have more grip, even when available traction is very low, like driving on gravel or loose sand. The vehicle feels more stable, and its rear end does not slide back and forth in a way that gives you heart palpitations. In a similar way, these protection strategies aim to provide stable and predictable investment returns, even in an environment of very low and sometimes negative returns. The journey to retirement feels more stable, and members close to retirement do not have to nervously watch the markets every day leading up to their retirement date. We achieve this stable journey by normally smoothing investment returns over a 24-month period, so that members are not exposed to so much volatility. But when returns have been very good or even negative, we may reduce the smoothing period to prevent large surpluses or large deficits to accumulate in the portfolio. In the graph, we illustrate the gross returns versus inflation over the last 10 years for all these strategies. All of the strategies have handsomely outperformed inflation for all relevant periods, with the 1-year return benefiting from a strong finish in equity markets at the end of last year. Firstly, the Volatility Protection Strategy has benefited from the additional exposure to the Satrix Enhanced Balance Tracker Fund, which is an aggressive passive portfolio. This passive component can add extra returns when markets are strong, but can also lead to the strategy having occasional negative returns. We can see the benefit of the additional returns on the 1- and 3-year return figures. Over the last 12 months, this strategy has outperformed inflation by 4.4% gross of fees. It is important to note that the Volatility Protection Strategy does not provide a capital guarantee, but provides returns which are far less volatile than a normal balance fund. Next, the Sanlam Stable Strategy provides monthly bonuses, roughly half of which are vesting and half non-vesting. In extreme market downturn, Sanlam may remove some of the accumulated non-vested bonuses, although we have not done so since launching an underlying portfolio in 1986. This strategy provides a real return of 5.5% over the last year. The same underlying portfolio is used in the Capital Protection Strategy. It is the interface of our lifestyle strategies. Lastly, we look at the Sanlam Secure Strategy, our most conservative option with the strongest guarantee. Sanlam can never remove or reduce any of the monthly bonuses once declared. the gross returns over the last 10 years have exceeded inflation by 3.2% per annum over the entire period. As with other portfolios, the strong equity returns towards the end of 2023 have helped the one-year return figures. In closing, our smooth bonus portfolios have continuously shown their worth throughout many election surprises. These portfolios have remained resilient and delivered good inflation-beating returns while protecting members' capital. This is to ensure that members have a smooth, confident journey while saving for retirement.